Hello everyone, my name is François. I'm very happy to find you back through this new and quick video that will focus especially on the update for the monetary policy for the United States, because we will have some like a crucial meeting will be held to the day after, so the Wednesday, 31st July. So I would like to discuss about the potential move of the Fed, especially. Okay, so if your first time to discover me, my name is François again. I'm the main trainer and founder of Global Street Trader Academie, GSTA. It's a Canadian online Canadian academy where we teach people how to trade stock, bond, indices, forex, ETF, right? And you can keep in touch with us definitely as the contact at Global Street Trader in one word.com, or take a look take a look on the website, which is www.globalstreettrader.com. Okay, I will let all the contact to the description. So at the potential move on the Fed, my point of view of that, my humble point of view of that, I don't think it would be a great idea to cut the rate interest as 2 times, which is expecting by the president, right, Mr. Donald Trump, American president, because we have the chart here, the historically charts of the Fed fund, the effective Fed fund rates, and it's going through 1955 to now. Okay, and what we see here, we see that through the last which is considered as the biggest financial crisis, like the subprime crisis. I can put some like a vertical right here to illustrate what I would like to discuss. We'll see here that through this period, the rate interest have been kept to the low interest rate, right, just to pushing and stimulate the economy, as the index will just rally since like 10 years as a bull run, right? It was considered as a long bull run ever in history of the economy. Okay, so that's why when we see as the sum of manipulative margin for the Fed, if they like hurry to cut the rate interest as expected by the government, the American government, it would be a very huge mistake, because he won't give another manipulative margin further to intervene right away in the economy. Okay, and if we can doing some like a chartism observation on that, we evolve to the narrow, right, to the narrow. We can take this one, so this one, it will be the top. Okay, so we evolved in the narrow like channel, or on the it could be for the diagonal between like a fork as the 2.5 at the 2.5 at the 2.25%, right? So that's why the American president, Mr. Donald Trump, expecting that they will cut at least 2 times the rate interest, and they were unanimously agreed to also use the insurance cut, as they describe, just to leave the markets taking advantage for that, and to prevent, as they qualify that, to precede the potential macroeconomic shock. Okay, but I'm not agree with this point of view, because we see clearly here that the Fed don't have like a certain manipulative margin to cut the rate interest, because if we continue, because the index already priced this this cutting rate interest for 1 or 2 times, right? And I do think that it will be important for the Fed to not touch the rate interest. They have to leave the rate interest unchanged, because where we see the we see a huge gap between the productivity, the anticipated productivity and the real capacity of the productivity of the US economy. We see a huge gap. So if they starting now to cut the rate interest, they won't get a certain power in the further when, because the market will mechanically thanks to that, and they will pushing the index higher, and they won't have this power to intervene again, because the market will also anticipating that they will leave the rate interest or continue in that policy to cut the rate interest. Okay, so that's why it's very important for the Fed, what I'm thinking, to leave the rate interest for now, and then they can cut one time at the end of the year. Maybe they can cut for just 15 basis points, and then it will giving them the certain power to intervene properly in the future, because we are not in expansion of the economy and we are not in crisis. We just in close to the end of a cycle, right? It's a kind of, you can see that as a big picture, as we are in the airplane now, right? And then we have the control tower where someone yelling about to going down, right? Because the kerosene is done, and the pilot, which is J Powell, he trying to slow down. Okay, he going to slow down. He figure out to slow down, because he will just figure out as he see the grass or the asphalt, and then he will pushing down, pushing down with the pace of the evolution of the economy, right? He can't just going straight to the going down straight, and then he don't have a certain margin to to pushing some to use the balance of the plane. It's very difficult to in that situation, especially because the macroeconomic data is still great. It's not the best, but it's not also the worst, right? We are just very mitigate figures, right? And then we have at the side of that the selling of the debt, which is very crucial level. So he don't have to definitely to leave the rate interest. I'm not expecting as he doing that, because in economy, as the economic policy, he have to leave the rate interest as the some of stationary level, and then trying to just use the word then to stimulate the moral of the investor for pushing mechanically the index, and then after he could have some a margin manipulation way to just going slow down again with the economy. This is the strategy, the best strategy for the economy to do that, because if we starting now to cutting the rate interest 2 times as recommended by Mr. Donald Trump, he will just show that the Fed has no power on the monetary as in own monetary policy, and no credibility and no transparency, right? And it will be definitely not good to see that, right? So that's why as the Wednesday, definitely not expecting that the Fed will cut the rate interest, or maybe slightly cut at the 15 basis point, just to say I'm making an effort to that. But even that is is not a great idea to do that. But they could do that, and at the end of year they can cut the rate interest 1 time this year, okay, not 2 times. This is what I personally think about, and I strongly recommend you as a day trader or as a macro investor to be prepared for this kind of scenario, because they all unanimously agreed that they will cut 3 times the rate interest, but it could happen also to not cut the rate interest because as I explained to you, the economy strategy for deal with this kind of situation. And if I'm able to do that, I think that all the PhD or all the master in economy could do that also, because it's not a drive the Fed alone. He has like a committee to help him to progressively deal with this kind of situation, right? So we see clearly here for the previous level before the major collapse, which is called the subprime crisis, we were to the 5% of the rate interest, and they cut a lot of time, maybe something like 8 times, right? And if they're doing that the next Wednesday, it will be the first time that the Fed cut the rate interest in 11 years, right? Because so it's a huge move. So that's why they don't have to be hurry to do that. They have a lot of time. They have to leave alone the rate interest for now, and then after let the market absorbing that, because the market has already priced the fact that they will cut 2 times. So they won't have probably a deception if the Fed leave the rate interest and not change. And after that, they could intervene and then cut the rate interest for the 15 basis points to just support or putting a little shock for the economy to accompany the pace of the index to slow down, because the objective of the Fed is not to avoid the recession. They can't do that, or to avoid some like a financial crisis. They can't do that. The job is to make sure that we have a soft landing to the recession, especially, okay? Because where we study to all the macroeconomics data is not like the best macroeconomic data as we expect, but it's not also the worst, so they have to think about in that way, in my humble opinion of that. But of course, if they follow the fact that the American president said to cut down right away the rate interest, including the insurance cut, it will be shown to people that the Fed is not like a credible, and I will be sorry for them, right? So it's not difficult, and I'm expecting very expecting that the Fed won't touch the rate interest, and then if we compare to that, we can see the comparison to the Dow Jones, because Dow Jones is the most old index in history, right? It has been created as in 1896, right? Let me put in the Dow Jones here and change the color, of course, putting the green. Okay, so look at this parabolic movement for the Dow Jones, the index, the most like old index, right? So they all like through 2010, through 2009 or 2010 to 2016, they have been keep the rate interest like low as much as possible. Like that we call the ZIRP, right? The zero interest rate policy, right? It was like flat here to the zero, as you see here the level, right? It was like totally flat, and then the index here from that level as keeping to progress, to rally, right? As you see, we have a long cycle of the ZIRP policy, and then the markets rally a lot. So that's why I told you guys it's not a good idea to to cut the rate interest, because they have to leave the rate interest at least have a correction until here, right? what I'm saying is totally like in economist thinking, right? It's they have to leave the rate interest at least when the index will break that level here before to intervene the market and then to cut the rate interest for support the economy, right? But if they just like doing right away, they don't have like a certain margin technically to keep continuing, because there will be, for sure, they already lag on the monetary policy, and they will also putting so much pressure on the economy to doing drastically, and then they won't have a certain margin for manipulation to support the economy, where we will be definitely in the we will going like certainly to the recession. They have to very careful of that, and have some dexterity to accompany as a soft landing to the economy, because where we see the macroeconomic data, it's we have like a very high score for the growth and inflation rate as a pace, and then it's starting to be like so, right? So we have to go in with this kind of move and not cutting right away the rate interest. This is my point of view. So we'll see that. We check about this, how the Fed will deal with this kind of situation. It will be very stressful for Jay Powell, I can imagine, but I do sincerely think that he don't have to to follow where the government said. He is the boss. He has to keep his position, and also has to maintain the rate interest. Pushing will be get some like technically as a resistance here, and then technically it will be the great time to to doing the inflection, and then the index now could be to going down with the same like a movement. Okay, so this is all of the thinking about for the rate interest policy. I'm assuming that you like it. If you do so, just putting a massive thumbs up, and also putting also your comment if you have some like a point of view of that, or if you not agree of my opinion, you can also explain, because it's very great for us to have like your feedback, and then it will give us the fact to increase the level and also the quality of the video that we produce to you. Thank you so much for watching this point of view. We'll see on the Wednesday what happened there, but be prepared. Okay, be prepared in that scenario that I explained to you, because it could happen, right? And my reasoning it would be just like for the as economist. So basically, if I'm thinking that way, as someone who has studied a lot the North American economy and the mechanism, I think some of economists could also thinking about that, and they could do that. So be prepared to that. And if we take a look quickly as the S&P 500, we can have technically some like a movement to like in some resistance, and we could get some like a correction upcoming, right here. So we see here, so it's very very flat. It's just waiting about the potential decision, and we could have some like correction as here, right? It could correct a bit, because if we see as a technically movement, it looks like a curve, right? We have a curve here illustrated, right? And we could have like a long and flat stationary movement to after going down. Okay, something like that. Okay, so very careful with that, be prepared to that. And my again, I'm very confident about that the Fed will doing some like a prolongation of the movement to maintain the economy, just as a mechanically movement, as a stationary movement. And then after they have is the best move that they can do, because I don't see any move as much possible for that, but they don't have certainly to cut the rate interest right away. Okay, this is my point of view. Thank you so much for watching this video. It was François for GSTA, and we talk about in the next video. Thank you so much, and go trader. Bye bye.